Hey guys, this is Kyrill Asatur with Centerfin Capital, and this is our collective weekly for the week ending July 19th, 2024. As always, we like to highlight a handful of things as it relates to markets and investing that happened this week. This week, we were going to discuss what happened in the market as we saw a major reversal of the trends that we've seen since the beginning of the year. Next, we're going to discuss this massive technology outage caused by CrowdStrike and how it reminds us of centralization risk and some other things we've talked about before. And then last but not least, OpenAI released a new model. And starting with the markets, since about July 11th, which was last Thursday, we witnessed a pretty big reversal in the market. As we've talked about for most of this year, the market is rallying, but it's really being led by a handful of stocks. Really, it's technology companies that are leading the charge. When we were going into July, the NASDAQ, which is technology heavy, was up about 17%, while the Russell 2000, which is an index of 2,000 smaller companies, was basically flat on the year. That's a massive divergence. We haven't seen that very often. And it's generally not healthy for the stock market to be led by a handful of companies, as we've discussed before. And so what we've said all along is that needs to, at some point, reverse, right? So either the tech companies need to come back down to earth and they'll bring down the market with them, or the small cap companies need to rally and catch up with the tech companies. So since last week, we've actually seen that reversal, and it's been pretty violent. If you look at just July month to date, the Russell 2000, that smaller company index, is up about 7%, while the NASDAQ is down a little on the month. So a complete reversal of the trend that we saw in the prior 6 months. Now, what's behind this is probably multiple fold. So first of all, last week we had the soft CPI number on Thursday, and that's what started it all. Not really quite sure why the soft CPI number would start this kind of reversal of positioning, but that's really what happened. So that basically cemented a rate cut in September. And that's when we started to see this divergence between small caps and big technology companies. The next thing is Trump has gained in the polls, and Trump does have more protectionist, isolationist policies in mind. And that's actually better for smaller domestic companies, which is more of what the Russell 2000 is comprised of. And then also positioning. So hedge funds are generally, they try to be long the companies that are going up and short the companies that are going down. And it's very likely that hedge funds were positioned very long technology and short small caps, and they might be reversing course. And then last but not least, there's a pretty massive option expiration that's happening on Friday, and that is sometimes a source of volatility as well. So it's too soon to tell whether or not this kind of trend reversal is something that kind of builds some health into this market rally, or this is the start of a downtrend down in the broader market. But it's definitely notable, and we wanted to bring it to everybody's attention. Second, we wanted to discuss this outage caused by CrowdStrike, which is a cybersecurity software company. They apparently released an update in their software, which basically crashed a lot of enterprise computers that run Microsoft as their operating system. So what CrowdStrike does is basically they run very sophisticated, almost antivirus software for what's called the endpoint. So the computers that employees of large companies use that run on Microsoft will use CrowdStrike to protect against threats on those devices, right? And so they released some sort of update, and it basically made those computers, so the gate agent at the airport that is trying to book you on your flight goes on her computer, and the screen is that blue screen of death, as they refer to it. And that happened to literally millions, if not hundreds of millions of devices, and basically stopped traffic. And there was, I think, over 3,000 flights canceled today because of this. That in and of itself is not such a big deal, but it does highlight the fact that CrowdStrike is so widely used across enterprises that one little glitch basically affects millions and millions of users and the end clients of those businesses. And it brought to our attention, along with some comments that Trump made this week, a risk that we've been discussing, which is really centered around China and Taiwan. And the reason why this is important is because 90% of high-end chips are made in Taiwan. And if China were to make a move on Taiwan, and they've talked about the reunification of Taiwan into China, that would be pretty bad. And Trump made a comment this week as it pertains to his policy stance on that. And he said he would do nothing to stop China from moving on Taiwan. And that would be really bad, again, if Trump were to win this election, and if that was the actual policy stance, and China were to actually go and try to take over Taiwan, that would grind to a halt supply of these high-end chips into that we need for all of our devices. Our computers, our phones, our cars, our washing machines all need chips that come from that country. And if you remember during COVID, when there was supply chain issues because there were chip shortages because of the stopping of trade that happened during COVID, and it caused prices to spike, this would be that on steroids. And it would be very bad for the global economy. It would be very bad for inflation. And so it's something to pay attention to because we do not think it's a risk that's really being priced into markets. China has made its intentions clear. The U.S. has historically stood by Taiwan. If Trump does get elected in November and he stays true to what he said this week about not doing anything about it, that could be very bad. And we wanted to make sure everybody was aware of that. And last but not least, kind of new developments in the AI world. OpenAI announced a mini model, GPT-4 Omni Mini, they call it, which is smaller and cheaper than the bigger model. And we think that's interesting because we ourselves at Centerfin have been playing around with these models for a while now. And we've come to the conclusion that you don't need the big models for a lot of use cases. You can use smaller models, which are obviously cheaper to run than the bigger models for certain use cases. And we think that OpenAI coming out with that, there's obviously other models out there, but OpenAI coming out with a smaller model, allowing for use cases that may have been cost prohibitive before to be built is super interesting. And we think that this is going to become more of the kind of mainstream way of thinking about the way to implement AI into products and services. And so we think it's a pretty significant development. And it also highlights how quickly things are moving, right? They just came out with 4 Omni, I think a couple of months ago, and things are moving quickly in this space. And we think it's super exciting. And we hope that it continues, and we think it will. That's all we got for you guys this week. And as always, if you guys have any questions or anything else you'd like for us to discuss, please just drop it in the comments. Have a great weekend.